Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Monday, the 18th day of June, 2012, and this is the daily report for gold and silver. Interesting price moves in the precious metals markets last night and today following the election held in Greece. We saw the market initially react in a bearish manner as gold traded lower, down about $10 at a couple of points, but it recouped very, very quickly when the belief that resolving the crisis in Greece was really not over. Currently, we have gold up about $1.30 at 1629. 1612 is the low, 1631 is the high. Unchanged in silver, 2884. With 28.21 the low and 28.96 the high. You know, traders, on Friday, I talked about two very important events that would be forthcoming on Sunday as well as midweek this week. Of course, the two things that I'm talking about were the Greek elections, which now have passed us, and the FOMC meeting, the Federal Reserve meeting, which is held monthly. Now, there's much anticipation and belief that the possibility for further quantitative easing, looser monetary policies, will somehow be revealed during this week's minutes as we hear what the Fed chairman and the federal presidents of their respective banks are feeling. My sense is they've been keeping things pretty close to the vest, so to speak. And I don't think we're going to see a tremendous amount of news out of that meeting's minutes, but we'll have to see. In terms of the marketplace itself, we have a couple of critical areas that I really want to look at in terms of where I think this marketplace could head. And I thought we would spend a few moments this morning plotting the different areas that I think we have the ability to go to. We've got a long position in gold, but we want to be very careful and watch how the market reacts. Now, to do that, I'm going to plot a simple Fibonacci retracement sequence. It's going to be a short-term sequence beginning in July, in which we saw this really almost parabolic move to the upside right in here. And by utilizing these lows here and this high here, it should give us some perspective on where the market might in fact find resistance if in fact it continues to go higher. Now, the first thing that we notice is these sets of bottoms here, this double or triple bottom, however you want to identify it, you can see that the bodies of these last two primary dips in the marketplace fall right within this parameter, 1569. Of course, I believe around 1530 was the low on this last clip down. We're looking at the cash market of gold. I think that that's going to be pretty superlative resistance. I think that support. I think that support should in fact hold. First area of resistance, and realize traders, resistance and support are one and the same thing because it really depends on what floor you're on and your perspective. In other words, if I'm on the ground floor and I look up at the ceiling, that's my resistance. But if I'm on the first floor and I look down at the floor, it's that same structure, but that's support. So resistance will become support as the market moves up. As you can see, the first plotting that we get is 38%, 1636. We've hit those highs. You can see that, there is no doubt, but we've not been able to make it through this area. So right now, this is our real short-term resistance right around 1636 to 1640. If in fact we should be able to take that out, and I believe that we probably will, but that's pretty critical. The next area is going to be between 1690 and 1700. You can see that's a 50%. Although that's very, very minor to me because really the big boy is going to be the 61% level, and that 61% level, as you can see, is 1744. And it has good historical precedence because you can see that as the market came up, this area here as well as this 1812, these were two pretty strong resistance areas. And those are really the areas that we want to watch and watch very, very closely. And traders, I want to do the same thing with silver. Silver, of course, is reacting a little bit differently than gold is currently, but we're going to be using the same Fibonacci retracement areas. In other words, we're going to start in July. It's going to be a very short-term Fibonacci retracement, and it's going to cover in the same way that we covered in gold, this basically almost parabolic rise that we saw. We're looking at a weekly cash chart of silver. Now, these don't line up as significantly as gold does, but I still think it's going to give us some really valid information. 76% retracement level, you can see some of the lows come here, but there's really no cigar. It's really above that. But when we look at our 61% retracement area, that's right in here, that's at 29.61. I think that if the market continues to go higher, that is going to be our real first level of resistance that we are going to have to overcome. And as you can see, you've got some of these areas being supportive of the market right in here and in here. And then in terms of our next rise, again, minor, 50%, 33.48. But I think that if the market continues to trade higher, this is going to be absolute resistance that we're going to have to overcome, and that's up around 37. But I think well before we hit that, we have to be able to take out really 29.61 and then 33.48. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.